All right, listen up. I'm about to drop some investing wisdom that will fundamentally reshape your thinking. I'm Kevin O'Leary, and I didn't get where I am by blindly following the masses. My wealth was forged by knowing exactly when to strike, by recognizing true value amidst widespread panic, and by possessing the unwavering discipline to put my money where my convictions lie. Today, right now, I'm going to reveal the two stocks I'd buy without a moment's hesitation if I had fresh capital ready to deploy, not tomorrow, not next month, but today. But before I dive into the specifics, you need to do one thing for me. If you're genuinely serious about building lasting wealth, if you're ready to learn how a real investor thinks, not some amateur dabbling with their retirement fund, then you need to hit that subscribe button right now. Join our community, because what I'm about to share isn't some fleeting get-rich-quick fantasy. This is about real money, proven strategy, and tangible results. I need to know you're committed to this journey. Let me paint a picture of our current reality. In my 4 decades of investing, I've rarely seen an economic environment as fascinating as this one. Everyone around you is practically running with their hair on fire, consumed by worries over inflation, interest rates, and the looming threat of recession. And my response to that? Good. Let them worry themselves into a stupor. Because when the masses are paralyzed by fear, that's precisely when shrewd investors like me seize the moment. That's when the most lucrative opportunities emerge. Fear, remember, is the disciplined investor's greatest ally. Most people fundamentally misunderstand investing. They equate it with gambling, with pure luck. But let me tell you, luck has absolutely no bearing here. True investing is about discerning value. It's about identifying companies that are veritable cash printing machines, companies boasting insurmountable competitive advantages, led by management teams with a proven track record of execution. Most critically, it's about acquiring these companies when they're on sale, not when everyone else is caught up in a euphoric frenzy. After years on Shark Tank, scrutinizing thousands of businesses, I know instinctively what drives success and what condemns failure. The two stocks I'm about to reveal today embody everything I relentlessly search for: powerful economic moats, robust cash flow, consistent dividends, and management teams brilliant at capital allocation. These are not speculative gambles, not some pie-in-the-sky tech startup promising to revolutionize the world without ever turning a dime of profit. No, these are solid, legitimate businesses with verifiable earnings. Let me ask you, when was the last time you genuinely scrutinized a company's balance sheet? Have you ever calculated a price-to-earnings ratio? Do you truly understand the miraculous power of dividend yield and how it compounds over decades? Most people don't bother. They just blindly follow whatever some talking head on TV suggests or chase tips from a random social media guru probably still living in their mom's basement. That's not investing. That's just noise. I'm here to cut through all that static for you. I'm offering you the same rigorous analysis I'd provide to my own family. Because here's my ironclad rule. I don't waste a single second on bad investments. My time is too valuable. Every dollar I deploy must work for me, must generate returns, must grow. If it doesn't, I ruthlessly cut it loose. That's the unwavering discipline that sets the wealthy apart. The cornerstone of my investment philosophy is simple. I'm a dividend man. I absolutely love dividends. I crave consistent cash flow. I thrive on getting paid while I patiently wait for a stock's capital appreciation. Why? Because dividends are undeniable. You cannot fake a dividend payment. A company that issues a dividend must possess genuine cash flowing through its doors. They can't just dazzle you with a fancy projection of future growth. They have to actually write you a check quarter after quarter. That's accountability. That's irrefutable proof that their business model works. And in this era of pervasive uncertainty and market volatility, dividends act as your ultimate financial safety net. When the market inevitably takes a 20% tumble, and trust me, it will at some point, you're still consistently collecting those sweet dividend checks. You're still getting paid. And if you're truly smart, you're reinvesting those dividends, acquiring even more shares when everything is effectively on sale. That's the secret to building profound wealth over time. That's the astonishing power of compounding, which Albert Einstein himself allegedly dubbed the eighth wonder of the world. Now, I know what some of you are thinking. Kevin, dividend stocks are boring. I want instant gratification. I want something that's going to double in 6 months. To that, I simply say, good luck. Go ahead and gamble if you must, but never, ever confuse it with investing. Investing is, by its very nature, disciplined, often boring, and relentlessly focused on generating consistent, robust returns year after year after year. When it comes to building lasting wealth, the tortoise consistently outruns the hare. So let's nail down precisely what I demand from these two stocks. First, pricing power. I want a company that can confidently raise its prices without alienating its customer base. In an inflationary world, this isn't a luxury, it's a survival imperative. If you can't pass rising costs onto your customers, your margins get obliterated and your stock goes nowhere. Second, a fortress-like balance sheet. This means minimal debt and abundant cash reserves. Because when the inevitable tough times hit, and they always do, the companies with pristine balance sheets are the ones that not only survive but emerge stronger, while the weak ones crumble into bankruptcy. Third, an unassailable competitive advantage, a moat. I'm looking for something that makes it incredibly arduous for rivals to invade their territory and snatch market share. Perhaps it's an iconic, beloved brand. Maybe it's a powerful network effect, or perhaps it's simply overwhelming economies of scale. Whatever it is, I need ironclad assurance that this company possesses that unique differentiator to safeguard its profits. And fourth, a sensible valuation. I don't care how phenomenal a company is. If I'm foolishly paying 50 times its earnings, I'm almost certainly setting myself up for losses. Value always matters. Price always matters. You can buy the finest business on the planet at the wrong price and still get absolutely crushed. These are the bedrock principles that have guided me for decades, the very tenets that have amassed my own wealth. And these are the exact principles I've applied to selecting the two stocks I'm about to unveil. But before I do, you must understand this. These aren't picks for frantic day traders. These aren't for those who obsessively check their portfolios every 5 minutes. These are long-term holdings. These are companies you acquire and commit to for years because that is the sole path to building true, enduring wealth. Not by frenetic trading, not by attempting to perfectly time the market, but by steadfastly owning exceptional businesses over extended periods. I've navigated 40 years of market cycles, countless recessions, brutal crashes, exhilarating booms, and devastating busts. Through it all, one truth has consistently prevailed. Own high-quality companies with robust fundamentals and hold them resolutely through all the market noise. While everyone else succumbs to panic and liquidates their holdings at the very bottom, I remain steadfast, and more often than not, I buy more. That is the fundamental chasm between a genuine investor and a mere speculator. All right, I'm about to unveil the first stock. I'll explain exactly why I'm so passionate about it, what makes it extraordinary, and why I would invest in it without a second thought. This is a company many people completely overlook. It's not flashy, it's certainly not sexy, but it generates immense profits. And crucially, it pays me to own it. The first stock I'd buy without hesitation is a powerhouse in the energy infrastructure space. Now, before you roll your eyes, picturing some mundane utility company, let me clarify why this is one of the shrewdest moves you can make right now. This company operates a vast network of pipelines, storage facilities, and terminals that transport essential oil, natural gas, and other energy products across North America. And here's the beautiful part. They couldn't care less whether oil prices surge or plummet. Their revenue is based purely on volume. They are, quite literally, a toll booth on the energy highway. Pause and consider that for a moment. Every single day, regardless of global events or the pronouncements of politicians regarding green energy, people still need to heat their homes, factories demand natural gas to operate, and trucks require diesel fuel. All that energy has to move from point A to point B. That's precisely where this company steps in. They own the irreplaceable infrastructure that makes it all possible. And let me tell you, you simply cannot conjure up a new pipeline overnight. The regulatory environment alone makes it a near impossibility. This grants them an utterly massive competitive moat. Now, let me articulate why I'm so captivated by this opportunity. Firstly, their cash flow is incredibly stable and predictable. They operate on long-term contracts with their customers, often spanning 20 or even 30 years. These aren't speculative spot market transactions where they're gambling on daily price fluctuations. These are ironclad, locked-in, contracted revenues. This remarkable predictability empowers their management to do something immensely important. They can pay a generous dividend and consistently grow that dividend over time. The current dividend yield on this stock is over 6%. Let me repeat that, over 6%. Try finding a savings account that pays 6%. Try finding a bond that yields 6% without saddling you with massive credit risk. You won't. And this isn't some precarious dividend poised for a cut tomorrow. This company has been reliably distributing dividends for decades, increasing that dividend multiple times. This, my friends, is a dividend aristocrat in the making. But it gets even better. The valuation is ridiculously cheap. Everyone is so fixated on shiny new technology stocks, artificial intelligence, and whatever the latest fleeting trend is, that they've completely ignored these foundational infrastructure giants. This stock is currently trading at a significant discount relative to its historical averages. Its price to cash flow ratio is incredibly attractive. Its enterprise value to EBITDA is more than reasonable. In short, you are acquiring a high-quality business at an undeniable bargain price. And that, my friends, is when you back up the truck and buy everything you can. My strategy with a stock like this is straightforward. I buy it, I hold it, I collect the consistent dividend, and I meticulously reinvest that dividend back into acquiring more shares. Then I simply let time perform its magic. Over 5-10 years, you're not just benefiting from the capital appreciation of the stock price, you're also organically accumulating more and more shares through that powerful dividend reinvestment. Your position swells, your income stream expands exponentially. This is the blueprint for building generational wealth. Now, I anticipate the predictable questions. Kevin, what about the transition to renewable energy? What about electric vehicles? Won't pipelines become obsolete? To that I say, show me the numbers. Yes, we are gradually shifting towards cleaner energy sources, but that transition will span decades, not merely years. Natural gas, in fact, is a critical component of that transition because it's significantly cleaner than coal. And even if we magically electrified every single vehicle tomorrow, which, let's be realistic, we won't, we would still require immense quantities of energy to generate that electricity. The robust infrastructure this company owns is simply not disappearing anytime soon. In fact, here's a crucial insight most people miss. As we build out more renewable energy capacity, we simultaneously need more natural gas plants to provide reliable backup power. Solar and wind are inherently intermittent. You can't command when they produce energy. But a natural gas plant, you can switch it on and off as needed. So natural gas actually becomes more vital in a renewable energy future, not less. This company also boasts another crucial advantage. They're not static. They're actively investing in new infrastructure, expanding storage capabilities, and growing their terminal operations. They are shrewdly positioning themselves for whatever the future energy landscape demands. Exceptional management teams don't sit on their hands. They adapt, they evolve, and they perpetually discover new avenues to generate returns. That's precisely what's happening here. Let me share some more hard data. Over the past decade, this company has consistently generated robust free cash flow. They've returned billions of dollars to shareholders via dividends and share buybacks. Their debt levels are entirely manageable, and they boast investment-grade credit ratings. This is not some speculative gamble. This is a true blue-chip infrastructure company that is simply trading at a discount because Wall Street is too busy chasing the next shiny object. And here's my absolute favorite part. When the market finally awakens to the undeniable quality of this business, when discerning dividend investors begin to flock back to reliable income-generating stocks, this stock will inevitably be re-rated higher. its valuation multiple will expand. You'll reap significant capital appreciation on top of that phenomenal 6% dividend yield. That's the extraordinary double benefit of acquiring top-tier companies when they are temporarily out of favor. I've built my entire career on identifying these precise situations. While everyone else is frantically chasing the hot stock, I'm diligently seeking out the boring companies that nobody bothers to discuss at cocktail parties, because those are the stocks that consistently build genuine wealth. Those are the stocks that reliably pay you while everyone else is in a panic over market volatility. That is the fundamental distinction between genuinely smart investors and undisciplined amateurs. If this deep dive resonates with you, if what I'm saying makes fundamental sense, then you need to hit that like button right now. Leave a comment below. Tell me if you agree with this pick or if you think I'm completely out of my mind. I want to hear from you. We're building a community of serious investors, people who truly grasp what it takes to build enduring wealth. And if you still haven't subscribed, what are you waiting for? Subscribe, and better yet, become a member of this channel. This is where we engage in real investing discussions, not speculative fantasies. But we're not finished yet. I promised you 2 stocks. The first was about reliable income, robust infrastructure, and that beautiful, boring cash flow. The second stock, while still a quality company and a dividend payer, offers something a bit different: significant growth potential. It's strategically positioned to capitalize on profound long-term trends that most people haven't even begun to consider. My second unhesitating buy is a formidable player in the healthcare sector. And when I say healthcare, I'm not talking about some high-risk biotech gamble on a drug in clinical trials. I'm not referring to a hospital chain beholden to government reimbursement whims. I'm talking about a company that sits squarely at the epicenter of one of the most defining demographic shifts of our lifetime: the rapidly aging population. Here's a stark reality many overlook. Every single day, thousands of baby boomers are reaching 65. This is the largest generation in history, and they are all getting older. As people age, their need for healthcare escalates. More prescription drugs, more specialized medical devices, more comprehensive services. This isn't a fleeting trend. It's an irreversible demographic certainty. And demographics, my friends, are destiny. The company I'm highlighting operates within a highly specific yet absolutely essential niche within healthcare. They supply critical products and services that are indispensable across the entire healthcare ecosystem. Hospitals, clinics, doctors, patients, they all depend on these offerings. And here's the crucial point: these products are not optional. They are not discretionary. When you undergo surgery, the hospital doesn't ponder, should we use this company's products or perhaps another? They must use them. It's integrated into the very standard of care. This creates extraordinary pricing power. When your products are indispensable, when switching costs are high, and when quality and reliability far outweigh price considerations, you can sustain robust margins. You can effectively raise prices to counteract inflation. You can shield your profitability even during severe economic downturns, because healthcare spending consistently remains one of the most resilient sectors of any economy. People might delay purchasing a new car during a recession, but they certainly don't postpone necessary medical treatment when their health is at stake. Now let's look at the financials. This company consistently generates enormous amounts of free cash flow. Their return on invested capital is exceptional. They maintain a rock-solid balance sheet with entirely manageable debt levels, and for years they've been consistently returning capital to shareholders through both dividends and strategic share buybacks. The current dividend yield hovers around 3%, which is robust, and they've steadily increased that dividend over time. This isn't a 6% yielder like our first pick, but that's because the market rightly recognizes the substantial growth potential inherent here. What you're acquiring with this healthcare stock is a powerful combination of both income and significant growth. You receive a respectable dividend while you patiently allow the business to compound its value over time, and it will compound robustly, driven by those undeniable underlying forces. An aging population translates directly to more procedures, more treatments, and an ever-increasing demand for the precise products this company manufactures. This isn't mere speculation, this is mathematical certainty. Let me break down their competitive advantages because this is what truly excites me. First, this company has invested decades in meticulously cultivating deep, trusting relationships with hospitals and healthcare providers. They're not just another vendor, they are an indispensable, trusted partner. In situations involving human health, life and death decisions, reliability and trust eclipse saving a few dollars. Hospitals simply aren't going to switch suppliers to save a paltry 5% if it means potentially jeopardizing patient outcomes. That profound stickiness, that ingrained trust, that is a monumental moat. Second, they possess undeniable scale advantages. As one of the largest players in their segment, they can negotiate superior deals with suppliers, invest more aggressively in critical research and development, and spread their fixed costs over a much larger revenue base. Smaller competitors simply cannot replicate that level of efficiency. And in healthcare, where margins can often be tight, efficiency directly equates to profitability. Third, they boast an impressively diverse product portfolio. They are not dangerously reliant on a single product or a lone customer. They have multiple, robust revenue streams spanning various critical areas of healthcare. If one segment faces a challenging quarter, other segments are there to pick up the slack. This inherent diversification significantly reduces risk and provides crucial stability. And it's precisely this stability that empowers them to consistently pay that dividend year after year. Now, regarding valuation, is this stock dirt cheap? No, not exactly. It's fairly valued. Its price-to-earnings ratio is reasonable, but it's not a screaming bargain. And you know what? I'm perfectly content with that, because sometimes you simply must pay a fair price for a truly exceptional business. I would always prefer to own a fantastic company at a fair price than a mediocre company at a ridiculously cheap price. Quality is paramount, and over the long term, quality always compounds. Here's a crucial lesson gleaned from 4 decades of investing. The most significant mistakes I've made weren't the times I slightly overpaid for a truly great business. My biggest blunders were when I bought utter junk just because it appeared cheap. Cheap stocks are almost always cheap for a reason. They carry inherent problems. They suffer from weak management. They operate with dying business models. And regardless of how low the price falls, you will still lose money when the company eventually fails. This healthcare company is emphatically not junk. This is a premium business with an incredibly bright future. And if I must pay a reasonable multiple to own it, I am perfectly fine with that, because I know with absolute certainty that in 5 and 10 years, this company will be worth significantly more than it is today. The growth trajectory is crystal clear. The demographic trends are irrefutable, and the management team has a proven track record of impeccable execution. Let me share my personal approach. I am actively building positions in both of these stocks. The energy infrastructure company provides that high yield and rock-solid stability. The healthcare company offers compelling growth potential, capitalizing on those unstoppable demographic trends. Together, they form a beautifully balanced strategy. I'm securing consistent income, I'm achieving growth, and I'm prudently diversified across critical sectors. This is the blueprint for constructing a portfolio that can confidently weather any storm. Now, some of you are inevitably thinking, Kevin, what about the tech giants? What about artificial intelligence? Everyone says that's where the real money is made. And yes, there is money to be made in technology, but here's the critical catch. Everyone knows it. Everyone is frantically piling into the same few names. Valuations are astronomically stretched, and expectations are through the roof. When expectations are that high, it's incredibly easy to disappoint. I'm not advocating you avoid technology entirely. What I am saying is, don't put all your eggs in one volatile basket. Don't mortgage your entire future on the slender hope that some AI company will single-handedly change the world tomorrow. First, build an unshakable foundation. Own the boring businesses that consistently generate cash flow. Own the companies that reliably pay dividends. Own the businesses that will undeniably still be thriving in 20 years, regardless of whatever the latest tech trend brings. That is your foundation. Once that bedrock is firmly established, then you can entertain some calculated risks on more aggressive growth stocks. But most people tragically do it backward. They chase the hot stocks first, pouring all their capital into speculative plays. And when those plays inevitably falter, they're left with nothing. Their account is decimated and they're forced to start over from scratch. That's not investing, that's pure gambling. And the house, my friends, always wins when you gamble. I've just handed you the blueprint. These two stocks, energy infrastructure and healthcare, represent the absolute foundation of a robust, resilient portfolio. They won't make you an overnight millionaire, but they will steadily compound your wealth over time. They will consistently pay you dividends that you can reinvest, and they will be there, strong and dependable, when the market crashes and everyone else is consumed by panic. Let me share a personal truth. I've navigated multiple market crashes. I've witnessed my net worth plummet by millions of dollars in a single day. And you know what? It no longer phases me because I know that if I own quality businesses, they will recover. I know that if I'm collecting dividends, I'm still getting paid even when the stock price is down. I know that the most opportune time to buy is precisely when everyone else is selling in sheer terror. That is the indispensable mentality you must cultivate if you aspire to true investing success. You cannot panic. You cannot sell at the bottom. You must possess the discipline to adhere to your strategy even when it feels deeply uncomfortable. And the only way you can maintain that discipline is if you genuinely believe in the businesses you own. If you own quality companies with robust fundamentals, you can sleep soundly at night, secure in the knowledge that they will ultimately be fine. These two stocks I've shared today, I can sleep at night owning them. I profoundly understand their businesses. I trust their management teams implicitly. I believe in their competitive advantages. I appreciate their sensible valuations, and I absolutely adore the fact that they pay me consistent dividends while I patiently wait for them to grow. That is what exemplary investing looks like. Now I demand action from you. If what I've said today resonates, if you clearly see the logical power in owning quality, dividend-paying businesses with unshakable fundamentals, then you must conduct your own thorough research. Don't just take my word for it. Dig into their financial statements, devour their annual reports, truly comprehend what these companies do and why their competitive advantages are so strong. Become an educated, empowered investor. And while you're immersed in that research, I need you to hit that subscribe button if you haven't already. I need you to become a member of this channel because we are forging something truly special here, a community of serious investors who understand that wealth is meticulously built, slowly, methodically, with unwavering discipline and boundless patience. We are not peddling get-rich-quick fantasies. We are about building real, enduring wealth that will last for generations. Leave a comment below and tell me your thoughts. Do you concur with these picks? Do you currently hold any dividend-paying stocks in your portfolio? What's your personal investment strategy? I eagerly await your insights. I want to know what's working for you and what burning questions you might have. This is a vital conversation, not a one-sided lecture. We are genuinely in this together. And here's the final immutable truth. The market doesn't care about your feelings. It doesn't care if you're having a bad day. It certainly doesn't care if you desperately need the money right this second. The market simply does what the market does. But if you position yourself intelligently, if you own the right businesses, if you deploy the correct strategy, you can consistently profit no matter what economic winds blow. You can build profound wealth in both good times and bad times. That's precisely what I've accomplished for 40 years. That's what I will continue to do. And most importantly, that's precisely what I want to teach you how to do. So stop squandering your invaluable time on fleeting Reddit forums and ephemeral Twitter threads where people are shamelessly hyping whatever garbage stock they impulsively bought yesterday. Start thinking like a real investor. Start laser focusing on irrefutable fundamentals. Start constructing a portfolio that will steadfastly care for you and your family for decades to come. These two stocks, energy infrastructure and healthcare, are my top picks. They're where I would commit my capital right now. without a moment's hesitation, not because they're thrilling or because they'll magically double tomorrow, but because they are solid, profoundly dependable, cash-generating businesses that are built to endure for the long haul. And that, unequivocally, is exactly what you should be tirelessly searching for. Thank you for watching. Thank you for being a vital part of this community. Now get out there, perform your due diligence, and embark on building the portfolio that will truly transform your life. Remember, wealth is forged one smart decision at a time. Make this one of those pivotal decisions. Subscribe, become a member, and let's continue this transformative journey together. I'll see you in the next one.